Hi there folks, it's Matt Hayson here looking at everything going down in and around the Sydney property market this week. Starting with the auction environment last week, 1,182 properties due to go under the hammer, producing an auction clearance rate sitting at just 50.3%. So still some pretty choppy results there. But very interestingly, just 26% of those 1,182 properties actually sold at auction or under the hammer. Now that suggests to us that many vendors aren't seeing that level of competitive tension and providing that level of confidence in order for them to run through all the way to auction, which is quite interesting. Also this week, we wanted to talk about this rental crisis and give you a bit of insight of what we're seeing across our rental portfolio, where we manage over 4,000 homes across our local region. Our vacancy rate is currently sitting at just 0.8%. I think the Sydney average is around 1% or thereabouts. And also as a result of this, our rents have surged forward by an average of 17% over the course of the last year. Also, around 13% of our investors in the last 12 months have decided to sell their investment property. Now, for a range of reasons: high cost of living, high mortgage rates, maybe some people taking some cash off the table to simplify their life. But we're only replacing around 50% of those with new investors coming into the market, and that's contributing again to this tighter rental environment. Now, according to Domain data, the average rent in Sydney is currently sitting at $1,300 per week, but on the current trend line, they forecast that rents will increase by an average of $1,800 per week by 2027. Now, sadly for renters, it is the perfect storm unfolding at the moment. We've got this high migration, which is exacerbating the issue. And also, we're currently seeing a gross undersupply of new dwellings being built in Sydney, operating at almost 40% under what we need in order to accommodate this growing city. And also, a number of building companies, which were considered too big to fail, have actually been falling over in this environment, which is not a particularly good sign. But as we know, everything in real estate is, of course, cyclical. And could all of this be about to change? The latest ABS data suggests that new home loan commitments are up right across the board, but in particular, investor loans are up by 22% over the course of the last year, as investors are eyeing off these high rents, low vacancy rates, and also the yields are improving. So we should start to see them sweep into the market over the course of the next 12 months. Now, I thought this chart was very interesting, seeing the comparison here between shares and also housing investment since 1926. And you can see here that they're running in parallel against each other. So it's certainly a very good asset class to be watching and investing in. Now that leads us into what is hot property and where to purchase in 2024. And there's no question what we are seeing now is identification of good quality apartments and townhouses in centrally located positions. Now these properties are attracting in your downsizer market, also those people that are looking to take a little bit of cash off the table and have lower mortgage stress, and also now investors. So keep your eye out on that particular type of asset, because they will be hot properties throughout 2024 and even into 2025 in our view. So folks, that's everything going down in and around the Sydney property market this week. We've got some great properties open for inspection this weekend, and our entire team looks forward to seeing you out and about, and I'll catch you all next week.